What's going on, guys? Welcome back to another video. Today I will be talking about the top 3 stocks to buy if a correction or a recession happens in the financial markets. So these 3 stocks will be 3 solid stocks that once a dip or correction happens, that will for sure 100% guarantee you a good return in 5 to 10 years. So let's get started. If y'all would like a free stock with Robinhood or Webull, the links are down below. For Robinhood, if you open up a brokerage account and use my referral link, you get 1 free stock and I get 1 free stock as well. If you open up with Webull, you get 2 free stocks and I get 1 free stock. So it's a win-win situation. Thanks. So the first stock out of the 3 stocks would be Microsoft stock. As we can see, Microsoft stock has been a dominant player in the field, and in the past 3 months, Microsoft stock has gone up 25%. And in the 1 year and 5 year chart, we can see that Microsoft has easily pulled on 100% gain in the 1 year and around 465% in the 5 year chart. And this is no small feat. Microsoft is still growing by double digits every single year. So my thesis behind Microsoft is that between the main tech giants, I expect Microsoft to keep going higher at a quicker pace. It pays a decent dividend at 0.9%, which is, I believe, one of the best for tech shares. And I believe the market cap will easily surpass 2.5 trillion and overtake Apple in the next coming years. I believe Microsoft's ability for computing and cloud is the best out of any other stock, and they have gaming and they're in many other sectors as well. Microsoft has also been in talks of creating their own chips and opening up management staff to create different industries where one works with chips, one's with cloud, one's with gaming like Xbox, one's with Azure, which is their cloud-based component, and one with hardware, software, phones, computers, and such of that nature. Microsoft will be here for the foreseeable future. So let's reiterate more about Microsoft's points. So Microsoft revenue has been consistently going up. In Q4 of 2005, they had around $45 billion of revenue. Well, by the end of Q3 of 2020, they're sitting at 143 billion. As you can see, they did have some negative revenue rates, but they were short-lived, usually less than 4 quarters, and then they used to spike up. As you can see, from Q3 of 2017 until Q3 of 2020, past 3 years, they've been growing 10+% every single year, which is phenomenal for such a high market cap company. Now, if we take a look at gross profits, they've absolutely exploded the past couple of years. As you can see, Q4 2005, 35 billion, and it's sitting around 100 billion at the end of Q3 2020. Past 3-4 years to well above 10% year over year gross profit margins, which is absolutely outstanding. This next stock might be quite surprising to many people, as many people don't know what the stock is, but the second most important stock out of the 3 would be Square stock. I believe Square stock is the future. As we can see on the 1 month charts, up 23%, 3 month it's around 100%, and the 1 year is at 150, and 5 years well above 1200%. So the IPO'd around $11 a share and it's at 156. So many people wonder, why should I buy at such a big premium? But if it does settle below $90 a share like it did in Feb, I'm not sure if it will, but it would still be a good buy. My reasoning behind Square stock is that they have showed tremendous growth in earnings, and as we know, cash payments are slowly trickling down, and due to COVID, that's been accelerated mightily. So what Square does, it's basically a Square point of sale mobile app where you can quickly and easily do online transactions with money, and they are in most businesses, right? So very small businesses, they use the Square software to where they can charge with credit cards and they don't have to have a whole chain set up. So if you go to a small business, they use Square. You go to bars, they use Square. Out of the S&P 500, around 60% of those companies use Square. Me and you also use Square. And the management staff is absolutely phenomenal. Actually, the founder of Twitter, Jack Dorsey, is the CEO of Square. So again, we have good management staff which know what they're doing. They've made great transactions. They made great deals, capital venture deals um, uh, with Mr. Son from SoftBank. They have a good grasp in terms of market capitalization in this industry, and I believe they will keep going up. But again, it's a great buy. I believe this is easily a $200+ stock if this continues. But if I see a pullback back down, I would love to buy this stock. Now let's take a peek at Square. So as you can see, Square's revenue is relatively new, unlike Microsoft, and we can see it's parabolic almost. It has gone up around 5x since quarter three of 2015. But if you see year over year quarterly growth, it is fluctuating like crazy. Some years are getting 20%, some years are getting 50%. In the past year, you got 63%, which is absolutely phenomenal for a growth company. I do expect this to keep going up. There has not been a single dip in a revenue in the past 4 years, which is absolutely great. If you look at gross profits, again, same thing. Start looks so clean in my opinion. Look at that. You're getting 50, 60% growth, but recently we did see a dip in growth. That's why I'm kind of reluctant to buy at $155. Would love for the stock price to keep going down. But again, these charts are absolutely beautiful and they're near perfect. So this third stock I believe is even more interesting than the other two. Those two were more in the tech sector, while this is more in the healthcare sector. So this stock is Johnson and Johnson. It's one of the oldest companies in the world. I believe it was founded in 1882. So it's over 200. I mean, sorry, over 100 years old, which is crazy to think about. So as we can see, Johnson and Johnson is a little bit of a slow mover, but it's a consistent mover. As we can see in the past 1 month, it's up 5%. 3 month, it's around 5% as well. 1 year, it's 20%, and the 5 year, it's up only 68%. So as we can see, Johnson Johnson is quite a stable company. Even during the March lows, it did not fall as much as the other players did. I believe Johnson Johnson is the biggest winner in overall manufacturing of healthcare products and research and development. So Johnson and Johnson is also such a big company that they can cut costs at a much quicker rate. For example, between Johnson Johnson and Pfizer, Pfizer is a great company, but they're no Johnson and Johnson. Johnson Johnson's offering vaccines at a 35% discount compared to Pfizer. So Johnson Johnson overall cost production is much lower. They have the highest FDA approval rate and most approved FDA drugs out there in the entire world. It's not even close. So some of the things that they provide, of course, is baby care. You got the baby powder, shampoos, oral care, over-the-counter pharmaceuticals, bandages, of course, women health products, and they also work in pharmaceutical segments such as vaccines, like I talked about, neuroscience, cardiovascular medicines, and metabolic medicines as well. So this was founded in New Jersey in 1886. So it's a very old company. They employ 100 to 32,000 people. So you know it's a great big company. I believe it's third on the most hired people behind Walmart. So this is also a good dividend stock, pays 2.52% current valuations. I have bought this stock before at around $118 a share. If it does go back to that $118 area, I would love to buy some more because I believe this is the safest stock behind Coca-Cola in what provides the best safety and best growth. And this company has provided over 57 years of dividend growth and over 50 years of consistent cash flow, meaning positive EPS. And finally, Johnson Johnson. So their revenue has been actually quite interesting. It's not been as consistent as many others, but whenever it's fallen quite less, the max being an 8% loss, but then quickly recovering within a matter of a few quarters. However, this quarter was quite bad. It's down around 10% from its year-over-year quarterly growth. However, as you can see, there's still a quite of a big uptrend towards the upside. Plus, the dividend is not factored into this. If we look at gross profits, again, phenomenal growth, 36 to around 52. It's not as great as Square or Microsoft, but again, you take more liabilities investing in those type of companies. However, I still believe this company keeps treading higher. But again, at these evaluations, you are getting into the little bit overvalued side. But if it does come down, I really love it. So thank you for watching. I hope you use my referral links down below and have a great day.